Hello everyone, this is Johnny, and I'm recording this video to show you my weekly breakout strategy with retest confirmation. It's a really simple strategy, and it's meant for really busy people who have less time to look at their charts throughout the week. In fact, you'll only have to look at your charts once a week. Um, Sundays, you can look at it, do some technical analysis, and then Monday, you can decide whether you'd be buying or selling. Okay, so this weekly breakout with retest confirmation strategy is good for assets such as gold, stock indices like S&P, NASDAQ, Germany 40, Japan 225, France 40. Those are my recommended assets to apply the strategy to. So what are the strategy rules? It's pretty simple. Okay, so what we have here would be our RSI, pretty standard, RSI 14. Let me show you the settings. Close, type EMA, length is 14. I turned off the calculator versions, but if you want to turn that on, it would be useful in anticipating bearish or bullish divergence. Okay, but otherwise, you just need the RSI line, and you would need the 50 level right here. So every time the RSI line is above the 50 line, you only take long trades. So that means the bulls are in power. RSI below 50 is bearish, short trades only, meaning the sellers or the bears are in power. Okay, so they're more dominant. Again, above 50, bulls are in command. Below 50, the bears are in command. Okay, so next, let's talk about long. Most of these assets that I mentioned have a long-term um, buy bias. So um, it's nice to actually have this strategy since I'd only need to be thinking of buying most of the time. Okay, don't get me wrong, you can also take short trades, but more often than not, you'll be taking long trades. Okay, so how does this go? For long trades, you would need to spot a weekly candle such as this. If you focus on this weekly candle right here, this weekly candle closes above the um, prior high of the previous weekly candle. Okay, so you would need a breakout and a close above the previous weekly candle, such as this. Okay, so once you have seen this close and there is a close above the previous weekly high, we don't enter yet. Okay, we wait for the next candle, and this next candle would need to retest this weekly high body close right here. So as you can see, this wick has retested this previous week's high body close, okay, or body high close. So once that happens, we still don't enter there, okay? We wait for the weekly candle to close, okay? So once that weekly candle closes, we also expect it to hold above this previous week's body high close with a bullish close. So this is your breakout. This candle is your breakout. This candle retested this breakout candle's body high close and held above it and closed bullish. So where do we enter? We enter at the open of the next candle right here, the next weekly candle. So where do we put our stops? Our stops would be at the original breakout below the low, okay, below the low, just below the low of the original breakout candle. And what do we do next? What we do is we enter two positions, okay? Usually I would enter 0.5 and 0.5, two positions. And the first position, I'll target TP1, a 1:1 risk to reward ratio right there. Okay, so I'll target a 1:1 risk to reward ratio for my TP1. Once this TP1 is hit, you'll see that's 3.97 stop loss just below this original breakout candle low. So you made 3.9798%. So your first position is taken out. You earn already, you bank profits there. And then you let the remaining position, the remaining 0.5 run. Okay, so you just need to trail it. Okay, trail below the new reference candle, which is the candle that broke above the previous weekly high, and just place your stop loss just below that. Okay, so just to be exact, right there. Okay, right there, and you just keep on trailing it every time you have a weekly candle that closes above the previous weekly candle's high. You just keep on trailing that. Okay. And this one closed above, so trail that. This one doesn't. This one does, so you trail that. Okay. And then this one also, so you trail this one until you get stopped down. Okay. Now there's another way of doing that instead of trailing it. Instead of trailing below the low of the new reference candle, what you can do is you could simply wait for the candle, this reference candle that closed above the high of the previous week's candle. You need this candle to be invalidated. So invalidation means there is a candle that closed below the low of this previous week's candle. So in this way, this candle invalidated this candle, and we can take our profit there. Thereby, from the initial 3.7, the second position made another 5.667%. Okay, so that's how you trade this. Let's take another example right here. So we have a break above the previous weekly high. We have a retest of the previous week's high body close, and we enter right here. Stop loss below the low of the original breakout candle. First position, target a 1-to-1 risk-reward ratio. Okay. Second position, you wait until a new reference candle is invalidated. This one has been invalidated. So we can take our profit 2 right here. Okay. Again, you can trail it every time the candle makes a new high, or every time a candle breaks the previous week's candle high, or you can wait for a validation. Okay, so it's your choice. Of course, by trailing, you won't be returning profits back to the market, not a lot, in comparison to waiting for the invalidation. Okay. All right. Now, in this case, you will see we have a break below this candle low. Okay. And then this candle retested this candle high. This candle low right here. Okay. We can enter a short after this candle closes. Enter a short right there. Stops below the original breakout candle. Okay. As you can see, RSI is already below, so we're free to do a sell. Okay. We have a 1-to-1 risk-reward ratio for TP1. Okay, and then for TP2, you simply wait for an invalidation, which is right here, this candle right here, or you can simply trail. Okay. Again, long bias is a lot easier, right? Okay, shorts are short-lived. Okay, so let's try this. So there's a break and close above this previous weekly candle. This candle retested the body high close of this breakout candle. We enter right here. Okay, we are above 50 or 50. If you don't want to enter here, since we're not yet clearly above 50, that's totally fine. You can wait, okay, for it to be clearly above 50, okay, here or here. Take a 1:1 risk to reward ratio for TP1, and you know the rest, okay? Now, once again, if this is not a clear above 50 in RSI, um, you could always wait for the next signal, which is this one right here, okay? This one right here closes below this previous week's high, a retest. There's no clear retest here, so let's skip that one. There's a break above, there's a retest, but this is a bearish candle. So let's take a look at this. Retest fails. Okay, here we are, here we go. So we have a close above this previous week's candle. We have a retest. That's good, it held above, and it also closed bullish. So we enter at this one, okay, stops. This is lower, so let's put this below here. Okay, 1:1 risk to reward ratio for position number one. Okay, that was easy right there. And then keep on, you trail it or until it gets invalidated right here. Okay, another one right here. We have this one. Okay, this close above this previous week's high. Retest successful. Enter right here. Stops below the original breakout candle. 1:1 as the first TP. Okay, and we're now at recent price action. So once the 1:1 is done, then trail your stop loss just below the reference candle. The reference candle, once again, is the newest candle that breaks and closes above a previous week's high for longs, and then short is reverse logic. Okay, so once that is done, keep on trailing until you increase your profits or until that reference candle is invalidated by closing below reference candle low. Okay, so I hope this video helped you out a lot. Once again, you only need to check your charts on Sundays, take a look at it, do some technical analysis, and then decide if you want to enter a trade on Monday. And that's it. The next time you're going to be taking a look at your chart would be the following Sunday. Thank you.